Hey there, welcome to Neppy Invest. So a little bit of a different video today because I want to discuss a company called GameStop. Now, if you have been following the news in the investing sphere, you probably would have heard a lot of stories about this company, what's been happening with their share price. So I'm not really interested in buying into the company, although if I did buy in a few months ago, I would have done very well out of it. Instead, I just want to discuss the short selling attack that was started by an investing community by inflating significantly the share price of the company. And I also want to talk about how we are treading down a very dark path and why this situation is the ultimate stock market pyramid scheme. So let's get into the video. So GameStop is a brick and mortar video game console and accessory retailer. They are publicly listed on the New York Stock Exchange, but ever since about 2016, they've really struggled with the changing world and they really haven't adopted to those changes. Actually, the company sort of reminds me of Blockbuster. I actually did work for Blockbuster back in 1998 and they struggled to really change with the changing times, especially when you think that they could have bought Netflix for a song back in the day. I think it was about 2000 or so. They decided not to because they didn't really have that foresight to see what the future could hold. So I decided to just look at the financials of GameStop, and you can see with the revenue, operating cash flow, and profit. I just did a bit of a graph here. You can see the revenue, which is that red line, that was going up from about 2006 all the way to 2016. It's sort of leveling off between 2010 and 2016, but the peak was around that time. And then ever since 2016, the revenue has been dropping, and that's the first sign of trouble for a business. We've also seen the last 3 years, the company hasn't been profitable, but they have actually had one, or the most recent year, they were operating cash flow positive, and that's the main thing I really look for to see if they are positive in the cash flow. So even though they are unprofitable, they are bringing in some cash, but the fact that the revenue is dropping is a concern. The other thing I did calculate was the compound annual growth rate of operating cash flow and revenue, and we can see negative numbers in all three for the last 16, 10 and 5 years. In fact, revenue has been up 3.7% per annum since 2016, but for the last 5 and 10 years it's been going backwards. So it does look like negative things are in store for this company, and that's the reason why we started to see short sellers really get interested in this company. So this is the 14-year weekly chart for GameStop. Now, it goes back all the way to 2006, and if you're holding this company from 2006 all the way to the pre-GFC levels of $62.50, you probably would have done fairly well. Share price then dropped all the way down to $15 in 2012. Went through a bit of a growth period between 2012 and 2016, but 2016, the share price did reach another little bit of a peak, around $47.50, and ever since that peak, the share price has been dropping like a rock. So it's gone from $47.50 all the way down to about $2.50. Now we've seen decreasing sales. If you see my previous slide, in 2019 they had a $673 million loss. Not looking good in 2019 and 20, so store closures, reductions in staff being fired, and then 2020 we've seen the COVID-19 panic, and that sort of pandemic has really affected their business. We've also seen a period of activist shareholding, or shareholders. So Michael Burry company, there's been quite active in trying to sort of, I won't say manage the company, but trying to bring some ideas for the management of the company. We've also seen Hestia and Permit Capital trying to implement a shareholder onto the board of the company. I'm not sure if that was successful or not, but when you see that sort of period of activist intervention or activist shareholders, that is or can be a good thing at times, because if they are successful with their activism, that can lead to increasing share prices. So because of the decreasing financials of the company, it was a target of shorters ever since about 2016. And you can see on January 22nd, 2021, 140% of the GameStop stock was sold short, and mostly by Melvin Capital, a hedge fund. And then enters wallstreetbets, which is a Reddit subgroup. Now, this is a stock and option trading discussion community with a reputation for very risky trading strategies. I think at one time I was a member of this group, but because of their trading strategies, I decided to stay clear of them. But maybe I shouldn't have. Maybe that would have been a good thing to stay with them. Now, this community did see an opportunity for a short squeeze. And I think originally they probably saw some value in the company. In fact, because they were operating cash flow positive, and the market cap at one point was something like $200 million, and operating cash flow was about $100 million. That shows you there is potential for deep value, especially if they think the activism by shareholders could be successful. But I think they also saw the opportunity for a short squeeze, particularly because the amount of stock that was shorted. Now, a short squeeze is when you get you see the share price rise quite substantially, and all those shorters have to cover the shorts they are holding. And it sort of leads to a positive feedback loop. Because they have to cover their stocks, they have to buy. And because the buying increases, the share price keeps going up, more shorters have to cover, share price keeps going up and up and up. So I think Wall Street Bet saw an opportunity for a short squeeze, and they went for it. And there's more, and that leads to what I think might have happened. Doesn't mean this is necessarily true, it's just my thoughts on the situation. So this is my conjecture. So initially they did see the value play. In fact, even if I was looking at this company, I might have seen a bit of a value play just because they were operating cash flow positive. I think something like $100 million. And the market cap at that point was something like $200 million. So there was a lot of potential for deep value, particularly if the activism by some of the shareholders was successful. So they saw the opportunity for that value. Then they really saw the opportunity for the short squeeze, particularly because the amount of stock that was shorted. But I think they got to the point where they were thinking, how can you play this out fully and make lots and lots of money doing it? So the big question is, how do you stop people selling when the share price starts to soar? This is a question I've been thinking about it for a long time. How do you do it? Because the thing that vexes me a lot, especially when there's some good news around a company and the share price starts to go up, I just keep thinking, if no one sells, the share price will keep on rising. But how do you get everyone not to sell the stock to make a little bit of profit? And it sort of reminds me of The Dark Knight, when right at the end, when they have those two boats, they all have a trigger for a bomb, and it's the question of who pulls the trigger first. And that sometimes it seems like we're playing that game when the share price of the stock is rising. Whoever's the first to trigger the sell, that could lead to a bit of a selling binge and people just selling out for profit, that sort of thing. So how do you stop that? And I think Wall Street Bet, some of those posters there, were thinking of ways to stop the selling when the share price of GameStop was starting to increase. So how do you stop the selling? So you have to try to convince the world that this is a David versus the Goliath, that we're the small player and we're trying to destroy the shorters. So how to convince that the people are taking back what is owed to them, that stealing from the rich to give to the poor, that sort of thematic, and make it a social justice issue. And I think they were largely successful with that. If you look at all the news, see a lot of the posts on Twitter, that sort of thing, a lot of people have really fallen for this. And I think they've done a massively great job at selling all of this because they've made massive profits. Some of the posters on Wall Street Bets have made multi-million-dollar profits by doing this. Look, I'm not going to say their heart wasn't in the right place. Maybe they were thinking some of these things. But I think at the bottom line is it was all about making money. So they were just trying to evoke passion, evoke the people to stand up, that sort of thing. And the ultimate goal was to increase the share price and to make a mozza. And of course, the narrative they were spinning was to destroy the shorters, destroy the man, take it to the man, show who's boss, that sort of thing. And they've done a great job. I have to admit, I've been extremely impressed with what they've done. Maybe I don't like what they've done, but I've been extremely impressed. So I have to applaud them. So give it up to them. So this is the 3-week, 15-minute chart going from the 13th to the 29th of January. The share price start of this 3-week period was at $20. And it was going gently up, increasing volume, everything you want to see as a technical analysis for a sort of an upward trend. I wish I saw this at the time because Even though I wouldn't have liked the company, maybe I could have bought in just because I like the technicals, that sort of thing. Everything's great in hindsight, isn't it? Around the 22nd, 25th, that sort of period, we did see a bit of a spike in the share price on high volume. So their scheme, their plan was starting to take off, but it really didn't really take off until the 27th of January, and that's when the share price took off. So they probably did some comments on Wall Street bets, that sort of thing, got people involved, other people, and it just snowballed from then. Share price got as high as $460 on the 28th. So that was actually, I was working that night, so I saw the share price action. It was amazing to see it get to $460, and then it dropped all the way to $120. So it was down 75% in 1 hour, and then the share price started to just level off. So it was down 44% in the one day, but to see that price swings was amazing. I think a lot of day traders would have been ecstatic with that sort of volatility, and I think at that point in time maybe some shorters had started to join in the fun as well. So how does this link back to a pyramid scheme? So I'm assuming you all know what a pyramid scheme is, so I won't get into the definition of that. Now, here it goes. Now, to keep the share price elevated, you're going to need more and more people willing to buy shares in the company, unless you have an infinite amount of money to keep buying and buying and buying stock on the company. Because at these elevated levels, based off the fundamentals and the financials, I think there's going to be a lot of shorters interested, and if shorters become interested in shorting the company stock, we're going to see potential share price pressure on the downward side, and to keep it going up, they're going to have more and more people willing to buy. Now, if you buy at these elevated levels, and there's no doubt these levels are elevated, you have to have the belief that there's someone willing to buy at a higher price than what you bought it at. So if you bought at $400, you have to believe there's going to be some sucker out there who's willing to buy at $500. And those suckers are really going to dry up eventually. So that's why this pyramid scheme won't last. It can't last, because as the share price gets higher and higher, there's not going to be anyone who wants to buy because of these fundamentals and financials. So even based off these fundamentals and financials, maybe I'm even willing to short the stock. And I'm not a big believer in shorting. I do believe shorters play a part because they can oust fraud, they can oust bad management, that sort of thing. But I believe there's also a lot of manipulation, because they honestly believe, and this is the truth, that fear is the most powerful motive when it comes to investing, and they're playing on people's fears, they're playing on investors' fears. So even though they do play a part, I think they do in many ways play on that fear of investors. So I'm not going to be willing to short. I probably will never short a stock, because I believe going long is the best way to invest. Now, also believe there's a little bit of hypocrisy at play here. And when the people who are driving the share price of GameStop higher and higher, that in a way is encouraging shorters to come and short the stock, because I can tell you right now, there are shorters who are looking at the financials and the fundamentals of GameStop and are thinking right now, this is the short play of the century, because the valuation of GameStop is at crazy levels. So I think in a way, this is encouraging shorting, which is probably the opposite of what they want to do. Also fearing that the little people, the small investors, the people who are the investors that have been encouraged to buy GameStop at crazy valuations, are the ones who are going to lose the most in the end, because they are encouraging to take it to the man. And don't think this is going to last. This won't play out. Now, savvy shorters, I think, will make a mozza in the end, because there's no doubt the share price will go down eventually to normal levels. Now, that is assuming the share price reverts to those normal valuations, which I think could be around $10 to $20, that sort of range. So there's a lot at play here. So the share price may not revert to normal valuations. What happens if management decide to do a massive capital raising? And what they do with that capital, who knows? Because at these valuations, they could raise a fair bit of capital, and that could be the smart play here. But anyway, I'm assuming right now the share price will eventually revert to normal valuations, because this pyramid scheme will eventually dry up. There won't be more people willing to buy at these crazy valuations. I think that's going to play out, and then shorters will have a field day and drive the share price down. That's what I think will eventually happen. It may not happen like that. I could be wrong, and I'm willing to be wrong even. So that's all I've got on GameStop, the ultimate stock market pyramid scheme. So leave a comment if you disagree with me, if you actually have joined the fray, have joined the buying of GameStop. I'd love to see comments of people who disagree with me, because even though I'm talking about all this stuff, I can be wrong, and I have been wrong numerous times in the past, and I always like to see differing sides of opinion. Now, I'm not a financial advisor, so don't take any of my advice at heart. And if you do need to seek out financial advice for your own circumstances, make sure you seek out someone who is qualified. So that's all on GameStop for this day. I'm really interested to see what happens with the share price tonight. That's all. Have a good day. Bye.